This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, July 29th, 2016. Eurodollar. So despite this latest correction higher, the market is still confined to a broader downtrend, and while it holds below 111.87, any rallies are classified as corrective ahead of what could be the next downside extension below next critical support at 109.12 from the 24th of June. Again, if we do see any upside, it should be limited to the 111.87 area, with only a break back above to compromise this bearish outlook. Sterling dollar. So not much going on with the cable over the past few weeks after the market broke to a fresh plus 30-year low just under 128. We've since seen some consolidation, which is natural to allow for some previously stretched studies to unwind from oversold readings. But the overall pressure remains definitively on the downside, and if we do see any rallies, they should be well capped ahead of the next major downside extension towards next key psychological barriers at 125. There's a lot of room for movement here, and really only back above 138 would compromise the current downtrend in cable. Dollar yen. So dollar yen looks like it wants to be putting in a lower top now below 111.45. We recently saw a high at 107.49, and so long as the market holds below that level on a close basis, we could see the eventual next downside extension towards next key support, which comes in the form of that 98.99 2016 and multi-month low. Only again a close back above 107.50 will take the pressure off the downside. Euro Swiss. So Euro Swiss has mostly over the past several days been confined to some very tight range, roughly between 108 and 110. And until we break those levels on either side, there's no real reason to be looking for any meaningful price action that determines any trend. Again, if we establish back above 110, we could see a move towards 130. And if we establish back below 108, really 107.78, that low that we saw back on the 16th of June, it could open the door for a more significant downside. Anything in the interim is we should just expect more choppy consolidation in the 108 to 110 area. Aussie dollar. So Aussie has been gradually trading lower, consolidating a bit over the past few sessions, but looking like it wants to put in a lower top at 76.77 ahead of the next major downside extension towards medium-term support in the form of that low that we saw on the 24th of May at 71.45. Only back above 76.77 would delay this bearish outlook. Dollar CAD. So dollar CAD has seen some mild setbacks in recent trade, but the key here is the breakout this week above critical resistance at 31.89, which does shift the structure and set the stage for the next major upside extension towards the 135 to 140 area. With that in mind, any dip should be very well supported ahead of recent support around the 28.60 area in favor of a higher low and next upside extension. Kiwi dollar. So Kiwi continues to be very well capped into rallies. We've recently seen a 2016 peak at 73.25 following a sharp setback, but now the market has put in a correction in recent trade, stalling out on rallies above 71. If we do see any upside, it should continue to be limited to the 72 area, and we eventually expect a breakback below some key support in the 69.50 area and towards next key medium-term support at 66.75. SPX 500. So the S&P 500 continues to consolidate off its recent record high at 2179. There is still room for another push while it trades above 2150 towards psychological barriers at 2200, but at the same time, if we see a break back below and a close below 2150, this will do a good job of signaling some form of an interim top and potentially a more significant top in favor of an acceleration of declines. Gold. So gold setbacks have once again been supported as this outlook continues to be highly constructive. The latest setbacks off the 2016 peak around 1375 have been supported ahead of some previous resistance and just ahead of 1300, and we look for a higher low now ahead of a bullish resumption back above 1375 and through a measured move objective which comes in at 1400. Really only a close now below 1300 would compromise the constructive outlook.